Hey, this is Matt from InvestiQuant. Today is Tuesday, March 9, 2021. And yesterday, the markets pushed higher and consolidated up above the prior day's high before starting to see a little bit of selling pressure into the close, ended up closing down near the lows of the session. But what we have taking place is a two-day pattern where the value areas are starting to migrate higher 2 consecutive days. So what the value area is the place where 70% of the trading activity took place for the day. And that's a market profile term. You can learn more about that if you Google market profile and value areas to figure out exactly how that's calculated. Technically, it's 68.2%, but it's where the majority of the trading activity is taking place for the session. And we've got 2 consecutive sessions where the bulk of the trading activity is taking place higher. So what I want to do is look at this type of pattern in a similar market environment and see what it has led to. So we're going to be looking at all 4 instruments. The setup is based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, this morning, the markets are trading higher, so I'm going to go ahead and add that to the study. I'm going to select gap up in the gap directions category within the opening filters. Next, I'm going to go into profile patterns, and I'm going to use this value area migration, 2 consecutive higher value areas. So that is right here, the value area migration. This will tell you how the value area is moving. Again, this is a market profile term. You can Google it and find all types of information about value areas and that sort of concept. And then lastly, I'm going to go into the indicator section, and I'm going to say we are above a 200-day simple moving average, but below a 10-day simple moving average. And then I'm going to click View Results. And here we go. These are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap up following 2 consecutive higher value areas, and this is below a 10-day moving average, but above a 200-day simple moving average. Historically, the S&P has 28 samples, the NASDAQ 38, the Dow 26, and the Russell 38 samples. If we look at the win rates on them, you can see the S&P is the strongest of the group. At about 68% of those 28 samples have closed above the opening print for that day. The NASDAQ's coming in at 55%, the Dow 62%, and the Russell 63%. So 55 is the worst of the group there. As far as win rates go, the others are better. If we look at average win, average loss, they're pretty similar in size for the S&P. The NASDAQ has a larger average win. The average win, average loss, pretty similar in size for the Dow and the Russell. They're a little bit of difference between the average win and average loss, but generally speaking, they're not too far apart in any of them, except for the NASDAQ, where the average win has been a bit larger than the average loss. So historically speaking, this pattern has been a little bit more favorable to the bullish side. So hopefully you found that helpful. Good luck today, and we will see you next time.